And welcome to Phil's Gang YouTube channel, the unfolding of the stock market crash. And this week we have some terrific evidence. Before I start, though, if you recall, last week I warned everybody to watch the yields, the interest rates. And I said, for all those people who continue to buy Microsoft and Apple every day, that's what they buy, be careful. Things are starting to change. Leadership is going to start changing. It's going to go to the banks. I warned and I said, look, we noticed that what's going on is that we're starting to see the yields, even though they were low, they got down as far as 113 basis points. We didn't see the Microsoft and Apple take off, and they should have. So here, I want to show you something. So here's the Qs, the NASDAQ 100 best stocks. I said last week, I said, watch, before you buy Microsoft or Apple or any tech stock, this is 365 right here, okay? This is 365 right in here. And I said, look, don't buy Microsoft or Apple unless we can hold this 365. The Qs hold it, but that holding is not enough. I said you got to have above average volume. First I said if you could get average volume. They couldn't get average volume. They couldn't get above average. So I finally said, then please don't buy them until the Qs punch out through 370. That's got to be your target, 370. Now watch what happened here. As the yields remained low, and then they started to move up from their 113 to 118 to 120. We saw a shift, and we started to see money going into the banks. Because why? The yields were climbing. Look at the difference. But if you go back and you take a look at Microsoft, you notice Microsoft couldn't break out because I was right about the Qs. The Qs couldn't hit that. The Qs could not hit that target of 370 because there was no volume. Nor could Apple. Okay, so Apple was doing bad. Microsoft was doing bad because the yields were going up, and that's not an environment they like. And even when the yields were going down, they still weren't going up. It was telling me everything was shifting to the banks, and because the yields today were almost near 125, they're heading towards 130. So the banks are now back into business. Okay, so just watch that, the banks. Okay, and be careful with your tech stocks. Now I want to show you something else too that's going on. Do you know that the amount of money they've been printing since 2018 to drive this market up? And I told you the market's been driven, the S&P's been driven by 5-6 stocks, right? The big tech stocks. But also, you got to look and take a look at what's been going on underneath the market is all this printing of money. They've been printing money, but none of the money has been going into business investment. None of it. It's all been going into QE, stock buybacks, keeping interest rates at low. So just go, they announced this week, they printed each day for the last 23 months, 2 years, $6.5 billion. Do you know how much that is? That goes to show you how terribly weak this economy is and why they can't raise rates. If they raise rates one quarter, it's over. So think about $1 billion. That's $1,000 million is a billion. That's a lot of money. Put it in perspective, if you were making $10 an hour, to earn $1 billion, you would have to work 12,500,000 days or 34,000 years to put aside $1 billion. What are you, nuts? So I'm making a point that the problem with the money is it's so amazing, the amount of they print. Think about this. With all the money they printed from 1914 to 2014, 100 years, the Fed put on their balance sheet over 100 years, $4 trillion. How do they do that? By printing all the money and going by mortgage-backed securities and everything else, putting on their balance sheet. So 100 years it took to get on their balance sheet, $4 trillion from all that printing. Well, when they've been boosting the printing, do you realize they doubled that in 2 years? What took them 100 years only took 2 years. What does this all mean? It means that the inflation is a killer. They're trying to prop this market up right now. And let me show you this. When you have that kind of a situation, you're getting so close to a crash. So think about it. All this printing of money. So it took the Federal Reserve 1,200 months, 100 years, right, to put $4 trillion on their balance sheet, and it took, again, just 24 months to put another $4 trillion. This is insane. But here's what nobody's talking about. This is the most important thing, and this has been so true. It's so true that how do you know when the market's going to crash? I told you there's two things you're going to know. One is the husband and wife will sit down and pay their bills, and as soon as they start saying, we can't pay one of our, we got to make a decision, we're going to pay the student loan, or we're going to pay our car payment, or we're going to pay the mortgage payment, or we're going to pay the credit card. When that happens, that's when markets crash, right? Well, there's something else that nobody talks about, and they don't want to talk about because they don't want you to know, especially the phonies on the fake business network. It's called peaking, peak to price. What's that mean? Manufacturing, take a look right here. If you take a look at manufacturing, let me put this back up here so I get you so you can see it. All right, here, manufacturing right here. See this? This is manufacturing. This is called the peak. They reached the peak of manufacturing on March 2021. We're in August. Now remember that. Here they peaked in new orders for manufacturing in May. We're in August. Production peaked in April. And then finally, employment peaked in April. Now, what does that mean? First, the employment is telling you, when they tell you about this 900,000 jobs, that's a bunch of crap. And let me tell you why that's a bunch of BS. Because when they closed down the economy and there's 24 people working in a restaurant, they closed the store, they said, I'll go home. Now we're opening up the economy, 24 come back to work. Those aren't new jobs. So they're saying 900,000 new jobs. Those aren't new jobs. That's like I let my staff go. Let's say you left 20 people go here. It's a weekend. And now we come home, and we come back on Monday, and now there's 24 people here on Monday. What are they going to say? Wow, look at Philstake. Is it really growing? They just hired new 24 people. No, it's the same people, you jerk. Okay, that's what's going on. So if you forget that BS. This is what you look at, the peaking, because the way it works, once you peak in all those categories, if you can't peak again between 3 and 6 months for the time you did peak, it can't peak again every time the market crashed. Every time. Go look it up. So here we are, March, May, April, and we're in August. This is one of the best pieces of evidence I've been able to give you. So I hope you enjoyed this. Please share this and and subscribe and like. Sorry about that. I was thinking about something else. And please join my gang, okay, for 10 days free so that we can guide you through this. Look, I'm not saying the market's not going to continue to go up. If they keep printing this kind of money, they can keep running the market up. But the biggest problem is this. The more they print money like this, the more Main Street's getting clobbered. Because remember, the more money you print, more inflation. Inflation only helps the wealthy who have all the assets. Besides stocks, they have diamonds and artwork and everything else. Main Street, the only asset they have is a job. If you're making $65,000 combined with your wife, you're screwed. Because the prices, everything are going up because of inflation, because of all this printing of money. So we're getting very, very close, okay, to the crash. So what you got to do is this. As they're extending the ETA of the crash, and they're extending the size of the bubble of the crash. It's not that it's not going to happen. Remember, I just said a few minutes ago, crashes begin when people have to select, okay, we can't pay this or we can't pay that. But remember what they're doing. They're printing all this money so they can give it to the people so they don't have to make any decisions like that. They're taking care of the people's utility bills. If you're behind on your rent, they're taking care of your rent for you. Behind on your mortgage, taking care of your mortgage for you. They're taking care of your association fees for you. You don't get evicted anymore. They just extended the eviction, right? You don't get evicted anymore. But it's going to happen. They can't keep doing that forever. So please, you got to be prepared so that you can make money on the way back down. 85% of you lose money because you don't know when to get out of the market, and you give up a fortune because you don't know how to make money when it's going down. Let me change that for you, okay? Myself and Steve will change that for you. Just follow my gang for 10 days free, and you'll see it works, especially the color-coded chart. All right, I'm going to let you go. See you on the charts.